Your credit score, or what's best known as your FICO score. It's just like a test. You do something positive, you get points given. You do something negative, points are taken away. The FICO score ranges anywhere from 300 points to 900 points. What affects it the most? Your FICO score is broken down into 5 different categories. 35% consists of your payment history, 30% consists of the amount that you owe, your debt to income ratio. Another 15% consists of the length of the credit or how long you've been having it. 10% consists of new credit, and another 10% consists of the types of credit that you have. So the first category, your payment history, is the most important category that it is. Like I said, it holds a weight of 35% of how your entire FICO score is broken down into. Do you make your payments on time? Do you pay at least the minimum payment each month? Whether it is a credit card, an installment loan. An installment loan holds more weight. An installment loan is just like a car loan. A credit card is a revolving credit line. It means that you don't have a set due amount each month, but it is extremely important that you make these payments on time. All right, some credit cards, some installment loans, you're 5 days late, they might report it as already a late payment, whether you make that payment or not. Some other credit cards, they wait till you're late for a whole month and then they report it. The fact is that they can report it if you're 1 day late. So just make sure that you get those due dates, that you make your payments on time, because if you don't, this is what's gonna have the most negative impact on your credit score. If you do, it's what's gonna have the most positive outcome in your credit score. The second category, which is the debt or how much you owe in total, holds a lot of weight to your credit score. Okay, one small rule that you should always remember: you shouldn't owe more than 35% of your available credit. That means that if I have a credit card with a credit limit of $1,000, I shouldn't exceed $350 of that credit limit. This shows lender that you're responsible, that you're not overextending yourself, that you're not choking considering your debt to income ratio. Debt to income ratio means that if I owe $1,000, but if I make $1,000 a month, that means that your debt to income ratio is 100%. That's not good. Don't owe more than 35% of whatever credit limit you have if it's a revolving credit account. That one simple rule will make sure that you have a very good credit score, or at least in this category, you'll be solid. The third category, which is the length of your credit. This holds 15%, so it's not as big as your payment history or the amount that you owe, but it is important. A lot of people have a myth out there that if you have a credit card and you're not using it, let's close it. Not good. If you have a credit card, if you have a revolving credit line or any of that sort, even if you're not using it, don't close it. It is important for lenders to see how long you've been had that credit card or that installment loan or that credit limit, for what period of time. Have you been using it responsibly? They don't want you opening, if you already have a credit card, if you absolutely need to, you can go ahead and open another one. If you do not need to, don't open more if you already have 3 on your credit score. Okay, 2 or 3 is just fine, but don't go on opening any new offer that you get out there. Don't go, because that's a credit inquiry that we're going to talk about, but that's also a new credit line, which brings your average of how long you've been had that credit limit down. For example, if I've had a credit card for 5 years, all right, but now I open a new one, what they take is the average of the length of history. So they're not going to go by 5 years, but that new one is going to bring my average down to maybe a year or 2 years. So unless you absolutely need to, open something else. If you do not need to, the necessity is not there, don't do it. If you already have 2 or 3, just keep what you have, but don't open new lines. The next category is new credit. Like I said, in the last category of length of history, unless you absolutely need to, take new credit. It holds 10% of your whole FICO score, so it's not a huge weight, but it does affect it. All right, lenders don't want to see you going from new company to new company to new company, getting different loans, getting new credit, this and that. It seems like you're overextending yourself and that you might just overspend also. So unless you need it, take out the new credit. The next category that I want to talk about is the type of credit. Okay, credit cards, or like I said, revolving credit accounts. That's what they are, revolving credit accounts. Your monthly payment could be different each month. If you have a credit card and you owe $1,000, then your minimum payment might be $35, $50. If you only owe $50, then your minimum payment will be $25. This type of credit is good. It is good, but it may affect you when you're trying to purchase something that has more value. For example, if you get a car loan, which is very good. I've seen credits that are excellent, but all they have is credit cards, and we could give them the opportunity of opening up a car loan. That's called an installment loan. An installment loan is a car note, could be a mortgage, something of that sort, where you have the same monthly payment each month. This shows lenders, if you made that same monthly payment each month, that you could be responsible, like I said, with something like a car loan or a mortgage or something of that sort. The credit card, again, it is good, but your monthly payment could be different. So it doesn't hold the same amount of weight as an installment loan. Things that greatly affect you getting new credit. A lot of people don't think about it because it's not so much reflected on your credit score as a whole. But if you decide, if you have a checking account, and you overdraft in that checking account, and you say, hey, you know what? I'm not even gonna worry about this. I'm not gonna pay it. That account is gonna go into collections. Collections gonna start sending you the letters and so forth to pay them. However, even if you decide to pay it then, the bank system, they have their own credit report system, apart from already your FICO score. Okay, well they put your name in the system. They see if you ever overdrafted on an account and you left it just like that and you went into collections. What that means is that you cannot open another checking account. If this happened in Bank of America and you decide to go to Wachovia and say, hey, I'm gonna open another checking account here, they're gonna tell you, no, we cannot open you a checking account. And what that does is that even if you decide to pay it later on, once it's already went to collections, you go ahead and pay it, you have to wait at least a year for that to clear, for you to open up a checking account. And banks, they protect each other. So this really affects you getting new credit. It can still be done subprime, but prime financing is already out the door. So if you have that case, please take care of it. If it's already in collections, pay it, wait the year, and then you can move forward with another checking account and so forth. So this doesn't hinder you by being so limited in what you can do and the type of credit that you can get. Second aspect that could really hinder you from getting new credit: utility bills. That consists of electricity, that consists of your water bill, your cable bill, and many times that also consists of your cell phone bill. Okay, the way a finance company sees it, or anybody, is, hey, if this person couldn't pay their electricity bill, which is a necessity, what makes me think that they're gonna pay a car loan, an installment loan, or even a credit card, doesn't matter. So utility bills, you have them, you need them, pay them on time, please. Even if you cannot make that payment on time, just pay it. Do not let it go to collections. Okay, if you have anything from Bright House, if you have anything from KUA, something that's a utility bill, just don't let it go into collections. It's fine if it's past due, because it's not gonna hit your credit. Not that it's fine, I don't want to encourage that. Don't try to get them past due. Just don't let them go to collections though. Don't move out of your house, don't go to a new house, don't get a new contract, a new company. You know that you owe money to Bright House, and just leave it sitting there. Take care of it, please. It might cost you a little bit then, but it's gonna cost you a lot if you leave it like that. Later on down the road, it's gonna cost you more than if you would have taken care of it. So I just gave you some tips on how to keep your credit score good, what things to do, what things not to do. However, this is a good starting point for you to start putting this into practice. But if you didn't do it in the past, don't worry. I don't mean to scare you off. You could get a brand new start here at Adam Market of Florida. It doesn't matter if you were late on your payment histories. It doesn't matter if you show that you do owe a lot of money. It doesn't matter if you haven't kept that credit line for too long, you opened up too many new credit lines. We could get you approved. I repeat, we could get you approved no matter what your situation is. Okay? Like I stated before, we have 3 different programs. Everybody falls under one of those programs, and that includes you. Come to Adam Market of Florida, fill the application online. If you have any questions, you can write me on my email, hgomez@adammarketofflorida.com. I will be more than happy to answer any questions that you may have. I want to assist you. I want to give you the best advice possible to get you in the car that you desire. Just like always, thank you so much for visiting our website. Once again, we're all about customer service, integrity, transparency, and honesty. And hopefully we'll see you here.